Hello and welcome all. Continuing our last year's initiative by IMS, we bring another season of Management Masterclass, a sneak peek into management pedagogy. In a constant endeavor to impart and enhance our students' knowledge, we've conceptualized these sessions so that the student gets first-hand experience in B-School pedagogy by expert faculty members on different subjects being offered in an MBA course. These sessions we've planned were akin to actually attending an introductory B-School session on a given topic. It will help you get a gist of some important subjects and to be equipped in making better decisions for your B-School course. This season, we present a session on Banking and Financial Services 101. Banking and financial services comprises of many types of businesses in managing money and plays vital role in world's economy. This management masterclass, we will understand the diverse landscape the financial services offers and with a wide range of career options. Some of the session takeaways are structure of a BFS program. What do we need and what are the challenges of a domain-specific program? What is the difference between a PGDM Finance and a PGDM BFS? What is different or unique about a BFS domain globally and in India? How the institution plans to teach this exclusive to BFS program, what is the unique and the way the institution plans to teach it, the history, practice, data, etc. So let me now introduce you all to our today's speaker, Professor Anand Krishnamurthy. He currently heads the PGDM Banking and Finance Service Program at IMT Ghaziabad and is professor in the finance area. Professor Anand is ex-banker, a global banker with over 35 years of international experience with multinational banks, HSBC, Chase Manhattan, Banker Trust, across Asia, Europe, Middle East, and North America. Prior to this role, based in the regional head office in Hong Kong, he led 70-strong team across 19 countries, managing USD 250 plus billion fixed income portfolio for HSBC Asia. So to tell you all a little bit more about the institution he comes from, IMT Ghaziabad has been consistently ranked among the top management institutes of the country. Today, it is a proud of more than 1,000 plus C-suite executives and 1,000 of professionals serving in leadership positions in the best known organization in India and around the world in key business functions like sales, operations, human resources, consulting, information technology, marketing, you name it and all. And of course, finance. So over to you, Professor Anand, to take our students through this interesting topic of banking and finance industry.
Okay, thanks very much for the intro, and feel free to pop in questions on the chat as and when they come across. We already have one question, and I will try to address similar groups of questions as we go along. Now, let me start by maybe giving a little bit more of an introduction about myself. So I graduated from the Indian Institute of Management in Ahmedabad in 1986 and joined HSBC. And I worked with them across 7 different countries, pretty much all over the world, primarily in the fields of global banking and markets. And as was mentioned in the intro, my last 9 years I spent in Hong Kong, managing an Asian balance sheet. So basically a team across 19 countries, managing what we call a high quality liquid asset fixed income portfolio for the bank of just around $260 odd billion. And it was a specialist team. It's about 70 people with a $1.5 to $1.8 billion PBT kind of. So it is a fairly highly specialized risk and revenue driven kind of business. I took early retirement from HSBC in October last year, and in April this year I joined IMT because they offered the opportunity to restructure a specialist PGDM program. Now, I mean, there are not that many which directly are competing with this kind of program. And to me, what was exciting was that rather than teach banking as one subject in finance or teach banking as even a couple of courses, a couple of sessions in an international finance course, here you are actually having the opportunity to delve deep into the detail of the banking and financial services industry. And I think that was the big kind of attraction for me. And let me try to maybe briefly tell you why that was important. All right. So when you think about banks, I mean, most of our experience with banks, I mean, let me leave the financial services to one side for a minute and let's just focus on banks. When we think about banks, we're typically thinking commercial banks, and we're thinking bank branches and cash deposits and withdrawals and credit cards and mortgages and maybe car loans and things like that. But there is a lot more to banking than that. I mean, if you look at where banking revenues come from, I think the easiest way to think about it is that it is hard to imagine any organization in an economy which touches so many points in the economy, ranging from, I mean, like, Citibank and HSBC have north of 100 million individual customers. They bank with pretty much every corporate. I mean, they have a corporate relationship with practically every large Fortune 500 company or a Fortune 1000. They would be basically banking the top 20, 50 names in every single country. They would be dealing with governments. They would be dealing with sovereign wealth funds. They would be dealing with pension funds, insurance companies, hedge funds. So you pretty much touch everybody from the mom and pop savings account, small cash-based kind of account, all the way through to governments and global corporates borrowing hundreds of billions of dollars and doing IPOs and doing equity underwriting and debt underwriting. So there is practically no point of the economy which is not touched by banking. Okay, and this is just banks, right? We're not even talking about the rest of the financial system. So when you think about, well, why do we need a special program for banking? Well, one is that it is incredibly large, right? The second thing is it is incredibly critical, right? This is not an industry which, if a company goes bust or if a company gets into trouble, it is not like just that particular company or its shareholders are going to get into trouble. You can imagine what would happen if a Citibank or an HDFC or an HSBC were to get into trouble. They will take the economy down with them. And in many cases, the large banks in a country are bigger than the economy of the country itself. I mean, for instance, Switzerland has Credit Suisse and UBS, and those two banks together are a multiple of Swiss GDP, right? So these are critical. And this is the lesson that the global financial crisis of 2007, this is the lesson that the banking depression of the Great Depression in 1929, all those things taught us is that the impact of a problem in the financial economy, the financial institutions, very quickly moves into the real economy. So these are very, very critical. So they are large, they're extremely critical, they are massively connected with the economy in so many ways, right? And because they are so large and connected and critical, the third thing about banking is that it is an extremely regulated industry. That means you have a significant number of key policy stakeholders who want to make sure that you do well and you work. It's not just how much money you make, it is how you make the money. What do you do? How resilient are you? How risky are you? How capable are you of solving your problems and not taking your economy down with you? Some of you might have heard the phrase, too big to fail. And what that means is that, regulators were scared during the financial crisis that if they allowed the banks to fail, which is what should happen in a capitalist economy, they would take the economy down with them. So they said, you're too big to fail. If you fail, you will take down our economy. So banks are subject to significant amount of regulation, also because they're taking money from depositors and they are investing that money on their behalf, and they're taking risks with that money. There is a stake, the regulators have a stake, the government has a stake, public policy has a stake in making sure that they are run well. So conduct standards and financial strength are all very, very important for banking. So to recap, very large, very critical, very regulated. Okay, and that is just banks. Okay, the next reason why you need a course focused on banking is because for such a large industry, it is not stable, right? It is going through a period of massive change. So Let me go back to 1994, and Bill Gates made a comment saying, banking is necessary, banks are not. Okay. And what did he mean by that? The services provided by banks, whether it is making payments, whether it's taking deposits, whether it's lending money, whether it is doing foreign exchange conversion, whether it is doing capital raising in the equity markets, debt markets, whatever happens, those functions are important, but it is not necessary that they will continue to be done by the traditional banks. And as all of you can see, you might be using Google Pay or Amazon Pay or a Paytm, or you could be, trade finance is now done by somebody like FedEx, which most of you would think of as a courier company. And so you find that a large part of what is banking traditionally is now being disrupted. So this is this huge critical industry which is being disrupted very fundamentally, where people are asking, well, why do I need a bank? Why can't I do this bit by myself? What is money? Why do I need a government to print money? Why can't I have an alternative money like Bitcoin, right? So people are asking very fundamental questions. So that means the banking industry is being reimagined. How do you do business? The very business model, the whole model of banks intermediating between depositors and borrowers is being questioned and challenged, and multiple models are coming, right? I was there at India FinTech Awards last week, and there are people disrupting everything from how a KYC is done, through to how assets are managed, through to how financial planning is done, through how credit is given. There was this amazing company which was trying to figure out, what if you have never been to a bank before? You don't have any financial data. How do I decide whether I give you money? I don't have any history. I don't know how good a credit risk you are. And they were using psychological games, which within a span of 3 minutes was able to give them a very good alternative credit score, which talks about your willingness to repay your debt, what kind of character you have, right? So you have amazing amount of disruption. Everything that banks traditionally used to do is now being reimagined. So you have this critical, large, regulated industry, which is being massively disrupted, right? And what we call the challenger banks are coming in. These are banks that are doing things differently, either through technology, or they are digital only banks, or, I was in banking, and even I can tell you, I was on a holiday in Norway, and I had to make a payment to a taxi driver, and he said, can you please pay to N26? And I was like, what do you mean N26? Is an account number? And he said, no, N26, it's a bank. And I said, are you sure? I mean, is it a bank? I never heard of it. It turns out it is one of the largest digital banks in Germany, right? It has more than 15 million customers, but many of us would not even have heard the name, right? So you're being challenged. It's not the traditional Citibank, HSBC, JP Morgan, HDFC names anymore. So this industry is being challenged big time, right? And the way even traditional banks are doing this has been disrupted by the availability of data. So before, what used to be called judgment or experience is now not being replaced, but it is being massively complemented by data analytics. That means that before, if I was going to make a loan to you, I would look at your history, I would look at your monthly salaries, I would look at how long have you been employed, I would look at what other debt you have on a mortgage or whatever. I would give you a score, and then I would say, okay, I like to give you money. I lend you the money. After that, I just sit and hope and pray that you pay me back the money. And if you miss a couple of EMIs, then I come back and ask you what the hell is going on, and I start managing it. But that is not really management. That is just basically saying, I lend and I hope you pay it back. Now I have access to data. Now I know every month what are you spending. I can see, well, you used to go to a restaurant every week. Now you're only going to a restaurant once every 2 weeks. You used to shop at a high quality supermarket. Now you're shopping at a lower end supermarket. You used to pay for sports packages on Tata Sky. Now you've canceled your sports package and you're just taking the basic package. All the data I can see right now, and that gives me an early warning indicator. It gives me a red flag saying, hey, this guy is cutting back on spending. He may be anticipating, or he may be going through financial distress. We need to review this credit risk, right? So that kind of approach to managing risk, even things that we used to do, we now do differently because of data, right? So data disruption. Those two are another, another big theme that's going on. So very rarely do you have a large and critical business being disrupted like this, like it is being done now. The last thing I would say that is different about banking is, let me give you this as an example. You know, maybe 100, 150 years ago, doctors realized that if you wash your hands and wear gloves and you use sterilized equipment, the risk of infection during a surgery becomes much less, right? Once they learn that, for the next 150 years and today, they still do it, right? They don't sit there 15 years later saying, maybe I should try not washing my hands again and see what happens, right? No science does that. When they learn something, they use that, right? Unfortunately, in financial instruments and financial markets, you all know that every 10 years or so, we have a big crisis. 10, 15 years, we have a big crisis. So that means we don't clearly learn the lessons of previous crises, right? And this is why there was a very fascinating book, which was written by a guy called Kenneth Rogoff, who's a professor at Harvard. And he said the 5 most expensive words in the English language are, this time it is different, right? Every time you start thinking like, oh, yeah, there was a crisis last time, but this time we are trying something else and it's different and it's new. And then, you know, crypto is different and then crypto collapses. I mean, subprime mortgages are different and then subprime mortgages collapse. I mean, so financial history, and that's the last point I'm making here, financial history is extremely important because we have a tendency to forget the lessons of financial history and we repeat the same mistake. So Warren Buffett used to say, why do banks find new ways to lose money when the old ones are working fine? And that is the problem. We make the same mistakes again and again. In 1994, we made a mistake with derivatives in a German company called Metallgesellschaft. We made exactly the same mistake in 2021 with a nickel mining company, right? So even though Metallgesellschaft is taught in business schools, I personally have taught that as a case. The learning for that is not stop those mistakes being made because you have a new set of people who come in, who become senior in the banks, who start thinking like, oh, things are pretty okay, let me take a chance, right? So lack of knowledge of financial history is a huge problem with risk management and is a huge reason why we think that not only should you teach financial theory and financial practice and use of data analytics and disruption of business models, we also think we should be teaching financial and economic history, right? I always think like if you don't understand financial history, it's like walking in halfway into a movie and trying to understand the plot, right? You don't know why you got here. You don't know how you got here. Why are you having these rules? What are the regulators worried about? What went wrong? And you're trying to figure out, oh, are they doing the right thing? What should we be doing in 5 years' time? Well, you don't even know what happened in the past, right? If you don't know about the partition, if you don't know about the history of India and Pakistan, and somebody tells you, can you go try to solve this problem? The first thing you're going to ask is, well, tell me how the story started. What is the background? Without knowing that is why financial history is extremely important. So when we are teaching a course, a postgraduate diploma course, an MBA course in banking and financial services, every course has these 5 elements: theory, practice, history, data, and disruption. Right? And we are teaching an MBA. So we are not just teaching a master's in banking. So we will teach the traditional MBA courses like, you know, organization structure, human resources and management, and legal aspects of business and financial statement analysis. But we will be teaching them through a banking lens, right? We will be teaching them saying, yeah, marketing is marketing, but marketing toothpaste is not the same as marketing mortgages, right? So we will teach you principles, but we will also teach you the why it is different in the financial services industry. So we have a course called machine learning in banking and financial services. So we will teach 8 out of 20 sessions, we will teach the techniques, how machine learning works. But the other 12 sessions will be use cases. How is machine learning being applied in financial services, right? So that's a reason why we have a separate course, separate PGDM in an industry, because it's an incredibly large industry. In India and internationally, it's a massively growing industry, right? In India, financialization is just beginning. Traditionally, if you talk to your parents or your grandparents, their idea of savings was property or gold. Right? Even fixed deposits was a relatively new thing. Now you have people investing in crypto, you have people investing in mutual funds, you have people investing in bond funds, you have the people investing in real estate, structured products. So now you're starting to see this big financialization of the economy, and it's just beginning. So there is huge growth opportunity in India. And a lot of the skills that you learn in India will be applicable globally, because India, the Reserve Bank, the SEBI, all the regulators are actively trying to be aligned with the global themes of regulation. So international banking is very similar to Indian banking these days. In addition to that, obviously, a lot of international banks have huge operations in India, not just on the banking side, but they have operations that support their global businesses. So if you walk into Goldman Sachs Bangalore or HSBC Bangalore or JP Morgan or NatWest in Gurgaon, they have businesses, they have a support business for their entire global teams. And these are not just doing operations and processing, they're actually doing much more high quality work like risk management and structuring and analytics and things like that, right? So you have a tremendous amount of growth both domestically and internationally in an industry which is being reimagined and challenged, and it's doing it all. As somebody explained, somebody gave a great analogy, and they said this is like trying to change the wheels on a racing car while the car is running, right? Banks are trying to adapt, but they're not shutting down the bank. They're actually continuing doing what they're doing while trying to adapt to a new world, okay? So that is what is just banks, right? And now we expanded to financial services. I see a question saying under financial services, what things are included? I would say, forget about the label. Think about, does this involve anybody borrowing or lending, right? If there is any way that you borrow or lend, whether it is a company borrowing from a bank, somebody putting a fixed deposit in a bank, or somebody investing in a stock market, or somebody buying a bond, or a company going out and issuing new equity, or a sovereign borrowing money, an Indian government issues bonds, whatever it is, if there is any borrowing or lending, that is included in financial services. If there is anything that requires movement of money between countries, like including foreign exchange movements, including making payments in different currencies and so on and so forth, that is also part of financial services. If you look at somebody trying to transfer risks, and these are financial risks, so somebody doing insurance or somebody hedging their foreign exchange exposure or interest rate exposure or commodity exposure or equity exposure or credit exposure, then that is also risk transfer is also part of financial services. If somebody is looking to plan their financial future, that is also financial services. So when you go to a Motilal Oswal and you say, well, I'm 35 years old and I want to plan for my retirement and I wanted to tell me how do I get there, then financial advisory and planning and saying how much money you need and what kind of buckets is also part of financial services. Apart from that, as I said before, you have regulators, because they have a huge stake in making sure the financial services industry is not only doing well, but it is supporting the real economy and it's not causing problems to the real economy. So the regulators are very much part of the financial services sector. So if I were to then give you some labels, you would say financial services includes commercial banks, investment banks, non-bank financial corporations. You would have asset management companies, you would have rating agencies, insurance companies, pension funds, sovereign wealth funds, hedge funds, sovereigns themselves, family offices. All these guys are part of the and then you have the infrastructure providers, the guys who provide clearing services, the guys like Bloomberg and Reuters who provide market data. So you have those guys as part of the financial services. And then you have the consulting. The consulting guys, most of the large consulting companies, all the large consulting companies have BFSI verticals, which support the banking and financial systems industry institutions as they go through these disruptive changes and they meet all the regulatory requirements, right? So everybody that way, and that is just the banking and financial services infrastructure. How they interact? Well, they interact with investors, real money managers, et cetera, as well, and the speculators and the technology guys. I mean, so That is why banking and financial systems, banking financial services is an incredibly vast industry. And we are only starting to scratch the surface of this. We are focusing on banks and we are focusing on non-bank financial corporations, and we are starting to bring in insurance and pensions and so on and so forth. Okay, so that is what I would say is the primary reason why we are running a program on banking and financial services, and how we are teaching that program to include those 5 pillars of theory, practice, history, data, and disruption. Okay. Any questions so far? Okay. Let me answer one of the questions that's there on the chat. Okay, good question. Is there any difference between the PGDM finance and MBA in finance in terms of subjects? Sorry, do you mean a PGDM finance and a PGDM in banking and financial services? Okay. Well, that is a huge difference. So let me put it this way. In the PGDM BFS, right, 64%, so nearly 2/3 are what we call essential banking courses, which means that we are going to teach things that are focused on. So let me give you an example. So in a traditional PGDM finance, you would learn corporate finance. Okay, you would learn corporate finance as in terms of, DCF and dividend policy and capital structure and all that. The way a CFO would be looking at it, a corporate CFO would be looking at it. When you learn that same subject in a BFS program, you would be learning it from the way a bank would look at it. So we would look at how do we look at corporate risk? How do we manage credit risk? How do we manage a relationship? How do we assess a corporate's credit worthiness? If you're learning investment banking, you will learn that in a traditional MBA program in terms of how a company thinks about by doing a merger, how a company thinks about doing an acquisition, how a company thinks about doing an equity offering. These things happen once in a while in a company. One company might do this every couple of years. When you look at it from a BFS point of view, we would look at it as, well, how does a bank which is doing investment banking every day, how do they look at it? How do they form a team? How do they assess the risk? How do they do the valuation? How do they get rid of the risk once they have done it? How do they do underwriting? What are their policies? How do they make money? So that is a very, very clear distinction from the point of view. So if you are learning derivatives in the PGDM finance world, you would learn derivatives as to how a corporate user would use them. When you're learning it in BFS, you look at how does a bank risk manage them, what kind of capital requirements they face, how do they try to manage a portfolio. So it's not like you're going to learn even the same subjects, the same titles might be there in the 2 courses, but they're very, very different because you're being taught from a banking and financial services lens. You will also learn a significant number of things that are relevant only for the banking and financial services. So you will learn a lot about regulatory expectations. You will learn about liquidity. You will learn about capital. You will learn about stress testing. You would learn about carbon markets. You would learn about fundamental reviews of the trading book. You would learn about treasury risk. So you will learn a whole bunch of things that are very, very domain specific. So to summarize, I would say 2 things: same courses, different lens, and then a whole bunch of new courses. So roughly in the new program that we have got, 64% of the courses are what we call essential banking and financial services, and 36% is what we call core management skills, right? So that is the way we would distinguish between a PGDM finance and a PGDM in BFS, right? And let me also answer one of the earlier questions. What is the path to becoming an investment banker? Well, the path is basically to understand kind of 3 things, right? One is technical, which is that obviously come and focus on your business valuation courses, corporate finance courses, introduction to markets, financial markets kind of courses. So that is a technical side, right? Understand the technical side of investment banking. Then the second thing is develop significant communication skills. And I'm not talking only about verbal communication. I'm talking about data visualization, presenting, creating pitch books, understanding how to present complicated concepts in a intuitively grasp. Understanding Tableau, understanding BI, all those things apart from verbal communication, right? So that is the second skill, which is once you know the analytics, how do you actually present it? The third one is a character trait, which is that be prepared to do a lot of frustrating work. in the first few years of your. So when you walk in, you are not going to be going and meeting the CFO and the CEO and talking mergers and acquisitions. You're going to be doing a huge amount of work on building pitch books, on actually collecting data about comparable transactions, building a news summary, all those things, and then you will not necessarily win every deal you try. So be prepared also to deal with frustration and have the emotional resilience to cope with that kind of work cycle for at least 3 to 4 years before you start moving into actual being part of the deal team and making decisions. So if you have the technical skills, the communication skills, and the work ethic and resilience, then yes, that's the subject that you want to get into, right? Which colleges are good for banking? Well, traditionally, the only training that you had that was bank specific was something like the National Institute of Bank Management, NIBM, right? And NIBM was targeted at people who are already in banking, and they traditionally only taught banking. They didn't treat financial services in the whole thing, right? And you have the Indian Institute of Banking and Finance, which also does some courses. But and then you have colleges like the TAPI Management Institute, but they have 70% of their courses aligned to the CFA program, which means that you might as well just do the CFA program. So and then IIT Madras offers small modules depending on very specialized areas in banking, which they basically, if you want to pick up a particular thing, IIT Madras offers that. IIM Calcutta offers, again, very small modules, specialized, aimed at very specific requirements. There are not that many programs which offer a full 2-year dedicated banking and financial services thing as IMT does. So there are colleges. Internationally, there are qualifications that do help, but they tend to focus primarily on risk management. So you have the Global Association of Risk Professionals, GARP, which awards the fellowship in risk management, and then you have something called Premia, which awards the risk management qualification called something, I forgot the name of the qualification, but that's also pretty well rated. Then you have the Institute of Risk Management in UK, which is pretty well rated. So those are kind of some of the, but they focus primarily on risk management. Yeah. Any other questions?
Yes. So, sir, we had a couple of questions asked during the registrations as well. I think it's a common question that students have from a science background. Can students from a science background study BFS? And if yes, what should one prepare for this course?
It is funny you should ask that, because the majority of people in the BFS program actually are from an engineering or science background. Okay. Now, the first thing I would say is I don't agree with that. Okay. First thing I would say is in my 35-year experience, one of the best traders of mortgage-backed securities, which is one of the most complicated bond markets in the world, one of the best guys, probably the best guy I've ever had in my team, had a master's in music. Right? And I've had people who come from an architecture background, from a history background, from a literature background. And it is more about, I would say there are two things. One is you got to have intellectual curiosity. Okay. Forget your background. Okay. We can always teach you the skills. Okay. This is not like rocket science or, brain surgery. So it is not hard to teach people skills. It is complex, but anybody who is reasonably smart can understand. But what they need is, one is intellectual curiosity. Okay. You need to have not just curiosity to pass the exam, not just about reading what your subject is, but you must have a curiosity about the world. Because remember what I said, the banks are connected with the real economy in every possible way. That means things that happen in politics, things that happen in economics, things that happen in history, things that happen in terms of social behavior, all of those things affect banking. That means you must have curiosity. And the second thing is a character trait, which is resilience. And what I mean by resilience is, easiest way to think about it is, when you're a Virat Kohli and you're that successful and you go through a bad patch, right? When you're going through a bad patch where for 2 years you're not made 100, okay? It's not that his technique is different. It's not that his competence is different. It is character that determines whether he's able to overcome that or whether he's not. So like that in banking, like if you're getting into investment banking, you might have worked for 3 months, day and night, no weekends for a deal, and Morgan Stanley wins it. How do you bounce back on the Monday morning? right? That is what drives success. So it has nothing to do with your background. Okay, so I would say think more in terms of, are you a curious person and do you have the character traits? Now, having said that, a related question would be, what if you're not interested in finance? Okay, is there any point in joining a bank? And the best example I would give is, think about how important technology is to a bank, right? So I have friends who went from being an engineer at BITS Pilani, okay, did a master's from Stanford in engineering, joined Barclays Bank, spent 30 years out there, and finished as the chief operating officer of Barclays, right? Responsible for all their technology, their digital transformation, everything, right? The guy never was into banking. He was never into lending money or financial risk management. So you have a career to the C-suite completely without even touching the finance side of banking, right? So even if you are saying, oh, I'm an engineer, I don't really, forget about whether you feel comfortable about learning banking, but suppose you feel like, well, I'm not really interested in banking. You still have a career in BFS because technology is such a critical part of banking, right? So yeah, I would say anybody with intellectual curiosity, basic level of smartness, and emotional resilience can succeed in banking, right? So coincidentally, because of the way we have been traditionally admitting people into IMT or into all the management schools, which is very CAT driven, and CAT, the way it is there's a significant advantage for people from an engineering or a science background to do well. You do end up with a majority of them being, and in the last 20, 30 years, finance is also, especially the market side of finance has become very quantitative. Okay, which is actually a problem, to be fair. It's not, there is a quantitative is important, but it's not, it shouldn't be a substitute for normal banking. Unfortunately, so therefore that is also favored people from a science and quantitative backgrounds. But no, the answer is you can get into banking and do very, very well, even if you actually don't have an interest in the financial side of banking, let alone if you're interested in banking, but yeah. So obviously, if you don't know anything about accounting, you will find that a challenge. But equally, you will be very comfortable with your introductory data analytics and Python and R course, where the guy who's come from a BCom will find it a challenge, right? So just come here and say, look, some things are going to be new, some things are going to be easy, and I'll just learn. None of this is impossible to learn. Okay, none of this is like, oh, it's so complex that if I didn't study it all the way from school, I will not be able to learn it. Okay, we are not talking that, it's not like doing high-level math and you say, well, if I haven't done an undergrad math, I can't do it. No, it's not like that. Okay, so yes, there will be things that are challenging. There will be things that are new, but that will be the case for everyone. It's not like a guy who is coming with a chartered accountancy qualification is going to find everything in an MBA easy, because he will find technology hard, he will find some of the math hard. So different people will find different things hard. So I would not worry too much about that one.
Right. And like banking also has changed so much over the years. I mean, the banking that we know, the traditional banking that we know from the 80s and 90s to what it has become, it's a completely different.
Completely. I can tell you, it was impossible for me to explain to my mother what I do. Right? Because I was, if when she thinks of a bank, she's thinking a bank counter, somebody sitting, and I'm telling her, well, I'm managing a high quality liquid asset fixed income portfolio and I don't ever see a customer. I mean, like, what does that even make? Most people don't even know what you're doing. So I couldn't even explain. If I go to a party and people say, well, what do you do in HSBC? If you say I work for HSBC, they'll be like, oh, you know what stock should I buy? That's about the closest they can. So it's completely different, right? So, and that is the beauty of it. There is a role for every type of skill set. Right? Somebody has put in there, what are the technical skills, right? And there is no one technical path to banking, right? The biggest skill is curiosity. Because as you said, there are so many changes that it doesn't matter what skill you have today, it will be outdated in 5 years. Right. So if you don't have the ability to learn, then you're going to really struggle. Right? If you say, well, I know coding or I know data analytics, whatever it is, it doesn't matter. It will get you a job today. But in 5 years, if you can't learn a new skill, then you're out. Right? So I would say, don't worry about technical skills. Think about a character trait, which is curiosity. Be intellectually curious, lifelong learners. I used to summarize this for all the kids we hired, the graduates and all that, and they'd say, well, what do I need to do to succeed? I'd say, be a resilient learner. That's it. You don't know what you need to learn, but you should be able to learn. If you're not able to learn, if you only say, well, I will only do what I think, what I know already, then you will be you'll be out in 5 years. So don't worry about this. It is about be curious and don't just say, well, this is not part of my job. Why should I read about it? If you read a newspaper, if you listen to a story, you got to have people who are naturally curious.
Right.
That is what, and even in IMT, we have this little thing saying that all we want you to bring is an open mind. And that's very true, because you're not really saying, bring this qualification. You're not doing a postgraduate where you're saying, okay, I assume you have learned all this in undergrad. No, I'm saying you come here being prepared to learn.
That's a very interesting way of putting it. So there's one more question. Is a 4-year academic gap a disadvantage for a BFSI course?
Depends on what you're doing in the academic gap. I'm assuming you're working, right? If you're working, then that is actually an advantage.
Right.
Not just for the BFS course, but for any MBA course, that is an advantage. And I can tell you that having not done that, when I went into my business school, I went straight from college, right? Zero work experience. So I finished my MBA when I was 20 years old. Okay. Now, in hindsight, I would have been much better off had I worked for 3-4 years, understood the real world and understood the real world challenges, understood how to work with people of different backgrounds and things like that, and then come into an MBA, I probably would have learned more. So I would say far from being a disadvantage, it would actually be an advantage. If you have got much higher work experience, right? So if you have worked for, say, 10 years, then I would say you should really look at a PGDM WorkX program, which is aimed at executives with, middle management executives with, 7 to 10 years of experience. Because then 2 problems. One is you have been out of studying for a long time and it takes some time to get back. And so this course is not really aimed that way. Second is that when you go for placement, the kind of people, the kind of profiles that people are looking for from a PGDM BFS program are not ultra experienced people. They're looking for people with maybe 0 to 4 years max of experience, right? So you'll be a misfit in that sense, right? So I would suggest that you go for a PGDM WorkX program, which is also there at IMT, but that is aimed at a different profile, and that is aimed at and the placement guys who come with different expectations. So you'd better fit into that program.
So since you started a topic of placements, if you could just give a brief idea of how placements work for these courses and what to expect for students.
Okay. The good news is that BFSI pays better than average.
Okay.
Right. I mean, BFSI, partly because it's an internationally mobile skill, so people tend to benchmark against international comparisons. So BFSI tend to pay better on an average. And to be fair, it is not free money because you do work probably longer than average as well. I mean, my typical day, even as a senior MD in HSBC in Asia, used to start at 7:30 and a normal day would finish by around 10. Okay, it's not like I'm sitting there at my desk all the time, but I am responding to mails or answering calls or being on a video call or whatever. And it does not work in the sense of doing, but it is in the work in the sense of being responsible for things, right? So yes, you get paid well, but you don't get, it's not a freebie. It's not an easy money thing either. Okay, so that is one thing. In terms of who recruits, obviously, the 3 main categories of people who recruit from a BFS program, one is domestic banks for domestic stuff and domestic financial services institutions, so banks, asset management companies, rating agencies, those guys. The second one is foreign banks for their Indian global service centers, right? So a Goldman Sachs or a JP Morgan or an HSBC or a Barclays or NatWest, which has got a big India center, which is supporting their global business, they come to recruit people. They come to recruit people in operations, analytics, project management, cloud migration, those kinds of areas, right? And the third thing is the big consulting companies which come and recruit for their own BFSI verticals. So within their consulting businesses, they have a business that's aimed at BFSI institutions. So for that, they come in and hire. So those are the 3 big groups that hire.
Okay. So we have another question. What is the ideal certification should we do before a BFS program?
No, I would say nothing is ideal, right? I mean, first of all, let's start with this, right? Let's say you want to do risk management. after you do BFS, right? Let's say you want to get into risk management. Now, there are certifications like, as I said, your FRM and so on and so forth. There are innumerable certifications available in things like Coursera and stuff like that, right? There is the CFA certification that you can do. There is the NISM, National Institute of Securities Management certifications that are there. There are literally hundreds of certifications, and many of them are good. They are good for that particular specific field, if that is what you want to go in. Okay, and if you already know that's what you want to go in. What I would suggest though is that you take a look at the program, see what you learn in the program anyway, and then use certifications to supplement that. Don't use it to, don't learn something and then just come and relearn it in the program. You'll get better grades, but you're not actually going to learn anything new. Right. So first take a look at the program, see where the gaps are, and then come and try to supplement those. So if you say, okay, I've come into the program, I've done the first 2 terms, and now I realize that I want to get into asset management and I want to manage a portfolio. So I want to do this XYZ course. So that is the way to think about it. So there is no like one good certification or anything like that, right? So don't worry about before BFS program, think more in terms of complementing the BFS program once you know what you want to do. Like you might want to do a project management certification because you say, well, I want to get into project management, right? And there is enough. So it's not a BFS specific skill. It is actually a skill for any industry. But BFS institutions have a lot of ongoing projects and they value that skill. So you may find what you need as you go along and you just use it to fill the gaps. Don't use it to replace what is on the program.
Okay. So there's one more question saying, is the structure of the PGDM finance management at IMT Nagpur similar to the PGDM BFSI at IMT Ghaziabad?
No. No, it's in fact, the structure of the BFS program in IMT Ghaziabad is not even similar to the structure of the PGDM finance at IMT Ghaziabad.
Okay.
Right? IMT Ghaziabad has its own PGDM finance, which has been there for the last 25 years. That is aimed at creating people who will eventually become a corporate CFO. Okay, so that is not aimed at the banking industry. That is aimed at people who will get into the finance side of Hindustan Lever or Mahindra & Mahindra or whatever, right? BFS is aimed at people who will end up working in the banking and financial services space. So to give you a sense of some of the alumni and all that stuff, I just literally was in Bombay last week and I was meeting some of the senior alumni from IMT Ghaziabad. They didn't do the BFS program because the BFS program is only 3 years old, right? So these are very senior alumni who passed out in 1988, 1990 and things like that. So one of them is running the Kotak Alternative Investor Fund, which is a 7 billion portfolio investing in real estate and things like that. There is one guy who is the country head of JP Morgan's corporate center. There is one guy who is the deputy, he's a group head of investment banking and wealth for HDFC. So there are very senior people, and these are people who ended up in banking. But the target now for the BFS program is to focus on people who will end up working in banking as a primary career choice, right? Or they will work in consulting, as I said, right? So it is very different from the PGDM finance. Okay, and that was one of the goals when I went there. My first question was this. I said, I can't see a difference between PGDM finance and this program. You call it 2 different programs, but they look very similar. And they're being taught in a very similar fashion, right? So we said, okay, no, we need to make the differentiation very clear. Yeah.
Right. So I think there's one last question. Is it true that today is the right time to get into the banking industry?
I would say so. It is as I said, it is a very exciting time because banking has been around for ever since one man lent money to another. Banking has been there, whether it was called a bank or not, it was called banking. Banking as we know it today, one of the oldest banks in the world that is still existing today is a bank called Monte dei Paschi Milan, which was founded in 1495 in Milan. So banking is 600, 700-year-old industry, even in its current form, right? So it can get pretty boring. If you say, okay, we've been doing it forever, we know what it is. But the point is, it's very unusual to have a very large industry which is also being disrupted. Right. In that sense, we are at an amazing time in banking where you have usually you will have small industries which are new, like crypto, which are kind of disrupt things. And, whether they work or don't work, it doesn't make a big difference because they're quite small. Or you'll have big, stable industries like electricity generation and utilities and things like that, which you don't expect it to change. You expect they're important, but they're stable. It's very rare that you have an important and disrupted industry at the same time. So in that sense, it is an incredibly exciting time. And that is why I said the important skill is to be a learner. Because when the environment is changing, if you only know the history, you're not going to be successful. You need to be able to adapt. And if you don't adapt, you will not survive. And if you do adapt, you will not only survive, you'll actually thrive. You'll do well. Okay, so that is why it's an exciting time to come in, because it's not a boring industry. It's an important industry, but it is also a disruptive. It's going through a change. It's going through a fundamental change. Yeah.
So a lot of exciting stuff happening.
Yes, absolutely.
So, sir, if there's one last thought, if you'd like to share with the students who are interested in taking.
See, I would just say that, look, if you come to a BFS program, it obviously, there are three ways you can come in. One is you come with some experience in BFS itself, right? So you kind of know this is what I want to do and I want to learn more. Okay, that's easy. Second is you come in saying it sounds good, okay, and I want to get into banking and financial services. If you come in like that, then you have two paths, right? That's the second and third thing. You either say, yes, this is what I want to do, or you say, well, actually, you know what? I don't want to work in a bank, but using these things, I want to work in corporate. I want to work in consulting. Now, all those three options are available, right? It's very hard for someone who's done a PhD in finance to directly go into a bank, because then you will need to be trained on banking specific products. Okay, but it is not hard the other way around. If you go in having learned a lot of how a bank works, stepping into a treasurer role or stepping into a CFO role becomes that much easier, right? So I would say you don't close any of your options. So if you have a marginal interest, and as I also said, even if you're not interested in the financial side of banking, there is enough happening on the, like my nephew works in financial crime at one of the large Canadian banks, right? He has zero interest in the banking side, but he's been very interested. He wanted to become a cop at one point. So he is very interested in the criminal side of outwitting, of creating systems that will defeat and detect financial crime and things like that. So there is a career path for that, right? So there are different career paths within banking. So it's not like, oh, banking is just about borrowing and lending money. Right? So you do have lots of choices. So I wouldn't restrict myself regardless of background. And it's not like you're making a commitment. It's not like becoming a doctor and saying, well, I'm going to be a doctor for the next 35 years. You can learn these skills and you can apply them in other corporate contexts as well. So I'd say it is exciting. Come in with an open mind, and I think you'll absolutely enjoy it. It is an adventurous time right now.
Yes. Thank you so much, sir. I think it is a perfect Sunday morning conversation. A lot of takeaways for all of us. Somebody who doesn't come from financial background, but yes, totally enjoyed the session.
Absolutely. Thanks so much. Thanks for the opportunity.
So hoping a lot of students, have got some great insights into the topic.
And feel free to reach out. You can always go to the website and you can find all of us, and you can reach out to us if you have any further questions. Yeah,
definitely.
Wonderful. Thanks for sharing.
Thank you so much, and thank you all for being there. Have a great day. Thank you.
Thank you. Bye-bye.